According to FNB's house price index for the 6 metropolitan areas in the country, former black township house prices outperformed their suburban counterparts and grew by 7.6% year on year. This is Tonight. I'm Bruce Whitfield, and tonight I'm joined by Gavin Vickers, who's manager at Remax Kairos, and Herschel Jawitz, the chief executive of Jawitz Properties. They're here not only to break down this market, but also the question is, what's really going on with former township properties in the contemporary sense? I mean, one looks at these former townships. South Africa is still very racially divided in terms of areas. One looks at the stats also showing suburban South Africa getting more black buyers than white buyers for the first time since democracy 20 years ago. There's some interesting dynamics at play here, Herschel.
Absolutely. So as you mentioned, I think that stat came out last year about the number of black homeowners, or rather black buyers, outpacing white buyers. And so what you're seeing is a transformation of your traditionally white areas as more black buyers come into those areas. But your previous townships are remaining largely black. And I think one of the trends we're seeing that support those stats is that originally I think the concept or the perception was that the moment you could afford to buy, or you could afford to buy up, you were emerging out of the townships. But I think as the townships are developing, and as there are new big shopping malls and better infrastructure, that I think that in actual fact the townships are becoming desirable areas in their own right for people who can afford to buy up and not necessarily have to move out of those areas.
When one looks at it in terms of the pricing of township houses, one of the greatest constraints to the evolution of the township market has been redlining by banks. Banks would literally draw lines around areas, saying we're not funding in that particular area. Yes. Then there's also been the issue of a lack of title deeds. People have been living in houses with 99-year leases, apartheid legacy, without title deeds to homes. Is that changing?
Definitely changing. I think one of the biggest gaps in this market is education, and education of the consumer as well. So we're seeing a lot of second-hand sales coming through now. The market's changed. We've just moved into Soweto in Jabulani, which is quite central. And we've got a lot of new developments that are coming where it's 1,000 to 2,000 to 3,000 units at a time. So of residential one stands ranging from 250 square meters to 400 square meters, which might sound very small, but in relative terms, your house size is 45 to 67 as an entry-level property. So it's not a massive footprint on the stand.
But are you now tying up with developers and saying we will drive the sales of these properties?
Absolutely. Our core focus is actually to partner with reputable developers that have delivered in the past and have big tracts of land with the opportunity of providing housing for first-time home buyers.
And what sort of starting prices are we talking about?
320,000 in Soweto specifically.
What does it buy you?
45 square meter. It has no finishes.
Whew, that's about what? How many grand a square meter?
9,000 approximately, 8 to 9,000.
That's an expensive build.
Well, the land is very expensive in terms of the servicing. So the servicing has been one of the challenges for most of the developers in terms of the economies of scale. It works because you've got 1,000 units, but it's still expensive to actually service the land. They have to put their investment in. And in relative terms, 320,000 allows other opportunities from an entry-level perspective. Even though the house doesn't come with tiles or with a proper kitchen or with bedroom cupboards, that creates employment for people in the area to come and assist and actually do the tiling and do the cupboards. And that's been quite interesting from our side to see. There's a lot of collaboration happening. Okay, so
there's an interesting startup market evolving and developing. You've got an office in Roodepoort, which also serves township markets as well. But it's a very new area for you as well, Herschel. It's interesting how this market is beginning to attract the attention of companies like yours.
Yeah, so I think that we don't look at it as specifically going into the township market. It's a viable market as we've seen the second-hand market. So not only the new build market, which is probably at a slightly lower level than your average prices, for example, in Soweto, but there's starting to become a sustainable resale market. So it's facilitated, number one, by the ownership issue, so there are more people with title deeds. I think people are having a much stronger sense now that a home, as we know it, is an ability to give you the ability to leverage your lifestyles when you build up some
suddenly you
equity.
Have an asset that somebody will lend
to. Correct.
You.
So it's not just about a roof over your head from one generation to another. It gives you an ability to leverage up your lifestyle as your property increases in value. And I think also what we're seeing is, the stats are showing that your first time buyer's market, so not only at your 200,000 and 300,000 rand level, but I think what we're seeing also generally across the market is a maturing of that black buying market, and I use that carefully because I think that what we've seen over many years is when you had disposable income, it was going into smart cars and smart clothing and consumer related
these
products.
Are asset investments.
Yes,
Yeah.
and I think what we're starting to see just by looking at the number of first time buyers, the increase in the number of black buyers in the market, is that for the first time perhaps there's a maturing of that market into, let's perhaps not look at cars and consumer goods, and let's look at buying an asset that affords us over a period of time an improvement in our lifestyle and at some level wealth creation. And so we look at those factors in determining which markets we're going into, whether they're Soweto or any other.
Well, what about funding? Because funding is absolutely crucial. I spoke about redlining, where banks would draw lines around areas saying there's absolutely no way, we don't get a return in that particular area. People default, there are issues with land tenure. We simply don't go any near it. Has that evolved?
It has evolved, definitely. I think one of our biggest challenges overall is funding, without a doubt. Simply from a point of view, we have around a 25% strike ratio, and that's after pre-qualifying a client. So you test his affordability.
So 1 in 4 people who comes to you with the desire to get
so
the
we've got
bond.
willing buyers, absolutely.
And I think, Bruce, it's more around in this case and is the credit worthiness or the affordability factor of the buyer. Now, there are certain suburbs in Johannesburg that perhaps the banks look at slightly differently because they may argue that those areas are in a phase of, for example, deterioration as opposed to improvement. And I think that in many areas in Soweto, the banks are looking at the areas more favorably because they're seeing the improvement in ownership values, infrastructure, shopping malls. The real challenge is around the affordability of the buyers, not so much the redlining of areas.
Okay, but banks are giving loans to 1 in 4 people who apply for them, which is quite a scary ratio. I mean, they're more generous than Fushini and Jawitz to turn away more at the moment because there's an asset there. But there also is an opportunity, there must be a buy-to-let market as well, Herschel, is there not? Are we seeing landlords, people with money coming in and buying 3, 4, 10 of these sorts of units?
Absolutely, and I think that's exactly because of the affordability factor. So people may be able to, for example, afford the repayments but not have a deposit available, which forces you into the rental market for a while. And the rentals relative to the cost of the units, the yields are pretty good. So, I think those yields are comfortably in double digits, which is very different to, for example, your traditional northern suburbs where those yields are sitting in single digits.
So there's an opportunity here for investors also to capitalize on this market.
What we're seeing is specifically what Herschel mentions is 100% correct, is to give an indication of different areas. We're all over Gauteng, specifically in affordable housing. And an indication would be that we would sell a property which a year ago sold for 315,000 for a 44 square meter unit, which has all the finishes in it, in Springs as an example. Now selling for 359,000, but you can rent it out for 3,800. And that's a fantastic yield. You can't compare it to buying in a nicer area for 700,000 and renting for 5,800. So there's definitely an opportunity for investors in affordable. Our biggest challenge when you mentioned funding just now is the entrepreneurs. There's a lot of entrepreneurs in Soweto specifically that have got 100,000 rand deposit on a 350,000 rand house, but we can't get them a bond.
That's somewhat depressing.
It is, but
are people then using microloans to buy houses? Because we see Capitex extending the term of loans, extending the size of loans. Its interest rates are still a lot higher than prime -1 or whatever the case might be.
Yes.
But a lot of people are going, well, to get the asset, you take the pain of the loan.
Yes, Capitec is also providing home loans now through SA Home Loans.
Well, SA Home Loans, it's good.
It's a channel, but ultimately, in terms of our funding at this stage, I think our biggest challenge is not necessarily, we do joint income, so we have to look at joint income, and our target market are the teachers, the nurses, the policemen, as an example. So the average income range for our clients are between 10 and 25,000 rand joint income to qualify for a house. But there are a lot of opportunities at the moment where, I don't know if you've heard of FLISP, which is a finance-linked subsidy program which government obviously initiated. And that product is very, very exciting for the affordable market because it allows a grant deposit, which is what we're looking for to try and change the affordability. So the perfect wave is, in that model, you need to earn between 3,500 and 15,000 to qualify.
Why get an RDB house when you can get a grant to put a deposit down on a far better property that is in your name, which is then a tradable asset at some point in the
100%
future?
right, yeah.
I mean, this is good stuff for South Africa's future as well.
Very
Maggie
much
Thatcher learned. She converted lots of council housing in the UK in the 1980s into assets for people and created a wealth revolution, because property, for many people, Herschel, is the first step on the path to some kind of economic independence.
Absolutely, and in some respects the only. So I think that what you're finding at the affordable housing level is that's where any residential market develops from and recovers from. It doesn't recover from the expensive homes. It's not a trickle down, it's a grassroots up. So you've got this buying into this affordable over time. Those values improve. There's still a significant shortage of stock, and those people then push up into higher priced homes. So at the moment, the recovery is not, or the price growth is not only around that affordable property market, but we're seeing that recovery into the millions. So if you go onto the websites, if you look at the stock for sale in Soweto, it's not just limited to 3 and 4 and 500,000 rand
Absolutely,
new builds.
They're very pricey homes. Yeah.
There's a sustainable resale market.
But broadly, the property market is rising. I mean, interest
Yes.
rates are likely to
Correct.
remain unchanged this year.
Yes.
That, if not a cut toward the end of the year, all things being equal, courtesy of the oil price, inflation is well contained. There is disposable income, and that tends to lift property markets.
Definitely.
Absolutely. And I think
10% growth this year overall for property, or not that good?
In our market, definitely at least
Okay.
10%.
Herschel?
Yeah, I think we're going to, despite what the economists say, I think we're going to see better than expected, close to double digits nationally on average.
There we go. There we go. Always, you can always pick. If you want to find an optimist, you got to find an estate agent. They'll always tell you a good story. My thanks for joining us for this evening's discussion. My thanks to my guests, Gavin Vickers, manager at Remax Kairos, and also to Herschel Jawitz, chief executive of Jawitz Properties. Until tomorrow night, thank you for watching. Good night.